Hey guys, and welcome to the Working Money Channel. Hope you guys are having a great weekend this weekend. I want to start this off with a tweet here from DJ Peter Vass. Guys, some Ripple XRP partnership news despite the tumbling market. We're going to get to the market in a sec. But first, I guess, I guess I just wanted to start off with something positive. Lotus Cars here and NFT Pro, they just announced a partnership with Ripple to bring automotive NFTs to the XRP ledger. So partnerships and building on the XRPL, this is still continuing despite the tumultuous crypto market. And this is Lotus, an iconic British performance car brand. They've just announced plans to launch an NFT. Lotus is to collaborate on its first NFT collection with industry expert NFT Pro and with Ripple as a blockchain partner providing technical support on the ultra-fast, low-cost, and carbon-neutral XRPL blockchain. The partnership between Lotus and NFT Pro marks the car brand's debut in the Web3 space by creating a community of and exciting new opportunities for Lotus customers. And not only that, NFT collectors and crypto fans. Web3 is the name given to next-generation online environment, incorporating concepts such as cryptocurrencies. So Lotus guys now partnering with NFT Pro, and they are building on the XRPL. So, I know the news out there is horrendous. If you go out there on crypto Twitter, you are probably hearing that the sky is falling right now, but I just wanted to bring you guys a couple of articles first just to show you that development is still continuing. The XRPL still being built upon. Ripple has said despite this crypto winter that, things are looking up for the company. So these are all updates that I think as XRP hodlers, we should take stock in now more than ever. Because, can you say the same for other projects, perhaps suffering from the market downturn, lack of funding, etc., etc.? So wanted to thank DJ Peter Vass just for pointing that out real quick. Also, guys, this one from Martin Volk. So another one here, guys, with regards to the XRPL. XRPL's most active project announces Maladroids, Fall Guys-like game with rewards in XRP. So on XRP, a modular system built on the XRP ledger, just yesterday they presented their latest novelty play-to-earn game Maladroids, I guess. I mean, this is a French word, but Maladroids perhaps is how it's pronounced. What looks like something similar to another extremely popular arcade game, Fall Guys is a new game where players controlling droids compete in speed and agility. The winner is the one who gets to the finish line the fastest. So this is just a tweet here, retweeted out by OnXRP. Dear community, we present to you Maladroids, starting with a 10-player obstacle run map. Before the game, you can put up XRP or OXP as a stake, and the first person who reaches the end wins. So XRP, one of the native tokens here, that will be utilized in-game. However, that's not all. The game provides a system of rewards nominated in the native tokens of OnXRP's platform, XRP or OXP. Before the start of each game, players can stake their tokens, as I mentioned just in the tweet above. So, again, another use case here we're seeing building. I mean, these aren't huge updates on the XRPL. However, I do think it's still important to stay focused, stay grounded, know what you're investing in, know that the XRPL, is going to be the future, pushing all kinds of utility, not just finance, forward into the next decade. And this one, guys, another one here from Fluff. Today, FLUFWorld is excited to announce an unprecedented partnership with Ripple to bring the open metaverse to life via the Robot Network. Here's how Ripple and the XRP ledger will open up a world of possibility for our blockchain and communities. The Root Network is at the heart of the Futureverse. It was funny because the first time I read this, I thought it said Future Ever Sexy X. Infrastructure set to give creators access to seamless smart contract functionality and application building, while natively supporting asset bridges to the Ethereum network. Partnering with Ripple on the Root Network brings exciting possibilities to our communities, extending the utility of XRP as the default gas token while unlocking XRPL's global infrastructure for Root Network developers and users. So for nearly 10 years, the XRP ledger has served as the best-in-class network for settlement and liquidity of tokenized assets. This partnership is now connecting the Root Network to one of the largest Web3 communities and provides the XRP community with access to NFTs across our eco world. Partnerships with the visionary leaders and businesses that believe in secure and open digital future is central to the Root Network and its continued evolution. Joining forces with Ripple is another proud milestone in this shared journey. Now we build. Ripple's commitment of invaluable resources and expertise will accelerate the next phase of Root Network's growth and development. We look forward to sharing updates with you along the way. So FLUFWorld, another partnership here, and they are obviously very, very proud to be partnered with Ripple and, talk about the XRPL in a way that really kind of makes it shine, right? The gold standard of distributed ledger technology. And, you know, this is all stuff that we've been talking about for years, but I think now more than ever, and I know I probably don't have to say this for some of the people that have been, you know, maybe watching my videos over the last 4 years, but for the newbies in the space, the people who have not ever been in a bear market before, I get it, guys. You're probably feeling very upset, shook, that your portfolio is down. And sometimes it's nice to just have these reminders that, you know what? At least Ripple is still building, at least Ripple is still growing as a company, and they have not lost their focus with regards to developing on the XRPL and utilizing the XRP token for many applications. So this is going to be the real value driver for the XRP cryptocurrency. Of course, there's the lawsuit, which we have to get past, but I feel like we're kind of on the back half of that. Here's just another update from James K. Filan. The SEC has filed an objection to the Ripple defendant's motion to seal Exhibit O in connection with Amicai's request to participate in the SEC's expert challenge. So just the latest here. If you guys are interested in that, I will link this in the description. Don't really have too much to say about that today. I feel like the biggest news is that the market keeps tumbling and everybody keeps wondering, how long is this going to last? Should I be buying up now? Should I be buying up later? Again, guys, everybody is in their own situation, and so, you know, you do you. I personally think the market has not actually bottomed yet. I mean, I thought it was going to bottom somewhere around $20,000. But it looks like it is still moving. And so, you know, I've been saying in several videos now, I'm going to let you guys know when I'm ready to purchase more positions in some altcoins that I've been eyeing. But the time still isn't now. And I'm going to give you guys a few reasons why the market could still keep crumbling. And it's a bit of a cascading effect, a domino effect. Jamil K's here just posting this. The Fear and Greed Index now is at 6. Okay, I thought 7 was low, but now it's at 6. The market down to $845 billion, but Bitcoin dominance still holding at about 43.4%. So Bitcoin is going down $19,200 as of the time of this recording, and I was getting alerts all throughout the night. Bitcoin down below 20,000, Ethereum down below 1,000. I woke up this morning and I was like, oh gee, what am I in for this morning? Tether is teetering too. We're going to touch on Tether a little bit. XRP is down to 30.5 cents, so XRP hasn't actually fallen much more than where it was yesterday, still sitting in number 8 spot. So here's the Bitcoin chart, guys, on the daily, $19,100. Yes, it has technically now gone below $20,000 and has now hit the former all-time high that we set back in 2017. The next time after that we saw that high was over here, basically at the end of 2020, December 2020, before we saw that move up, and then started trading sideways for a little bit. And now Bitcoin is down, touching that same level that we marked back in late 2017. So this, to me, is looking like a very, very important level of support. But there are certain things that we haven't seen on the chart that would denote that this is it. Stuart XRP brought this up, and I haven't seen too much from Stuart as of late, so it's nice to see him on Twitter here. No massive buy volume. The lower we go, hashtag Bitcoin, hashtag altcoins, with a bit of a distressed emoji here, if you guys can see that. So no massive buy volume. What does that mean? Okay, if we zoom in here on the Bitcoin chart and you guys can see, let me just get rid of some of this. You guys can see down here. Here, let me see if I can zoom in a little better on that. Zoom in a little better and take it off auto so I can drag that up a little so we can see the volume in conjunction with the price action here. You can see Bitcoin has just been tumbling. And what we hope for, okay, once we get past the psychological levels, whether it is 20,000 or whatever, we usually see, if this is going to be a rebound, if this is really going to be the bottom, we usually see high buying volumes. So we do see a large green candlestick here, but that should be coupled with a large green candlestick on the chart. And we just don't have that. So there isn't enough interest from buyers at this moment in time in order to denote any kind of reversal, at least not yet. So this might not be a V-bottom out of it kind of situation. The other thing we got to pay attention to is the overall crypto market. Now, we know Tether plays a pivotal role in this, and I'm going to talk a little bit about Tether today. I'm also going to talk about 3AC, the Three Arrows Capital, and how that is actually, surprisingly, tied to the market more than you think. So is Tether at risk of losing its crown? The biggest stablecoin's market value continues to fall amid the current market downturn, while its rival USDC is gaining ground. USDC, we know, is another stablecoin that is favored, I think, amongst businesses, amongst regulators. And USDT is kind of the rebel. And now we're seeing trouble for Tether's USDT coin. Amid Tether losing market share over the past few weeks, the Circle-based USDC stablecoin has been growing notably. So this is probably very, very positive news. Regulators are probably very happy about this. Tether, the biggest stablecoin and third largest digital currency by market cap, continues losing its market value. On Thursday, USDT's market cap dropped below $70 billion for the first time since October 2021. The drop followed a cascade of repeating declines shortly after the USDT market value reached its all-time high above $80 billion in May. And so you guys can just see down here, as per this chart, the USDT 90-day market capitalization here just dropping over April, May, and now into June, dropping even more. So the market cap for Tether is dropping, and its biggest rival, USDC, the second largest US dollar-pegged stablecoin, backed by the peer-to-peer payments technology company Circle, they have actually gained value over that same period. So you guys can see the gain in value for USDC specifically. Why is this important for the cryptocurrency market? Well, we know there are a lot of Bitcoin guys out there, a lot of these exchanges, pro-Bitcoin organizations that have been utilizing Tether to be able to purchase more Bitcoin. And there was a story, I forget what it was, I think it was BitMEX. They were using the Tether to buy Bitcoin and then using the Bitcoin to back certain assets to say that they had more money than they did or whatever. They were using it as kind of a false Ponzi-ish kind of facade. And then the whole thing collapsed, and the founders, Arthur Hayes, was one of them. They were brought into court. They were charged. So Tether right now already has a very, very shaky reputation. And now we're starting to see it collapse. Now, will USDC be able to pick up the slack? I don't know, but this certainly is not good for the rest of the crypto market. There was also this thread that I wanted to bring to you guys. Miles Dutcher here. We're witnessing the biggest leverage reset in crypto history. One of crypto's largest VCs, 3AC or Three Arrows Capital, is facing insolvency, which could spell disaster for the entire space. Here is the ultimate thread on what led to the downfall of 3AC and what it means for the future of cryptocurrencies. So guys, listen very closely, because as much as I haven't talked a lot about 3AC, and I didn't actually really know how big it really was until I did a little more research on it. It is looking like this could have a larger effect on the crypto market than originally thought. So just getting into this, Three Arrows Capital is a crypto venture capital fund led by these two guys here. So it's Zhu Xu and Kyle Davies. These are the founders of that organization. At their peak, they were managing an estimated $18 billion in assets, ranking them in the top 3 VCs in the space. Some of their most successful investments include AVAX, NEAR, and Ethereum, ETH. Unfortunately, a mix of poor risk management, greed, and recklessness has led to insolvency, which has severe ramifications for the entire space. Here's a step-by-step summary as to how that happened. It all started when Zhu Xu deleted his Instagram and went radio silent on Twitter, causing rumors to spread about a potential 3AC margin call. Shortly after, it was revealed that 3AC had $245 million of Ethereum deposited in Aave. I'm just reading the Twitter handle here, of which they used as collateral to borrow $189 million. So you see what they're doing here. They had $245 million, using that as collateral to borrow another $189 million. But due to their illiquidity, because they had all this tied up, they didn't actually have liquid funds, many tokens were locked. They were unable to add collateral to pay off their debt. This led to a liquidation cascade. Many began to label their overuse of leverage as irresponsible, as many positions were left exposed when the market started dropping. Things started to get worse, though. It was revealed that 3AC was leveraged long everywhere, resulting in a flurry of margin calls. Instead of answering these calls, they ghosted everyone, resulting in forced liquidations, leading to a broader market dump. So for those of you guys who do not know what a margin call is, well, first of all, there's the 2011 movie based on what happened in the 2008-2009 mortgage crisis collapse of the stock market. But I thought I'd just bring up a definition here. It is a demand by a broker that an investor deposit further cash or securities to cover possible losses. So the broker can actually contact you to dissolve your margin position. So if you're borrowing on margin, they'll call it in and you have to cash out. In finance, margin is the collateral that a holder of a financial instrument has to deposit with a counterparty to cover some or all of the credit risk the holder poses for the counterparty. So it's borrowed money, essentially. They had to call this in, and apparently this led to a cascading effect, forced liquidations, leading to a broader market dump, which we're currently seeing. It became evident that liquidity issues were worsened as 3AC were seemingly forced to sell over 60,000 of ST or staked Ethereum. As the ST-ETH saga unfolds, Zhu Xiu finally confirmed the market's suspicions by publishing his first tweet since the fiasco commenced. And here's the tweet. We are in the process of communicating with relevant parties and fully committed to working this out. So these guys were a big party, and since they were in trouble, a lot of other companies suffered because of it, guys, and this is why we're seeing what's happening in the market, or at least part of why we're seeing this. Miles continues by saying the beginning of 3AC's woes can be directly tied to the collapse of Luna and UST. So remember that from back in April. 3AC supposedly borrowed money off investors and deposited into Anchor without informing them, bought $560 million worth of locked Luna, and that position collapsed to a mere $600. So you can only imagine putting in $560 million worth of Luna and it collapsing, and well, you know the story there. 3AC allegedly used counterparty funds to build a 9-figure UST position in Anchor Protocol, unbeknownst to its creditors prior to the collapse. There's also speculation that these losses led 3AC to increase their appetite for leverage as a form of chasing losses. Like many investors, VCs and asset managers like 3AC and Celsius got overconfident in the heat of the bull market. So guys, we're seeing something similar with Celsius. Celsius now freezing users' funds, and I recently did a video on that if you guys still do have money stuck on Celsius, and I should mention that this would be for American citizens only. I did do a video on that, and I will link it up here in the top right-hand corner if you guys want to see that. We see a lot of this in poker, regarded as being pot stuck, when effort or money already spent is causing you to stay around even though it's a losing proposition. So you've invested too much in the pot, and now you've got to stick around and play your hand. They kept putting money into the pot to recoup previous losses, resulting in exponentially increasing risk. As Vinny Lingham pointed out today, in crypto, you're already taking on significant risk. Why add leverage and further compound said risk? I think in the case of 3AC, it's clear. Greed. So why does 3AC's insolvency spell disaster for the rest of the crypto market? Well, here is why, guys. Because they borrowed from almost every major lender. FTX, Celsius, BlockFi, Nexo, and BitMEX, to name a few. If 3AC is unable to repay its loans, all lenders inevitably take a hit. This kicks off somewhat of a domino effect. Unfortunately, the sheer size of 3AC's loans spell more trouble than the typical borrower. So for example, if you take out $100,000 from a lender, you're effed. If you take out a $100 million loan from a lender, however, the lender is effed. When lenders start getting affected, this is detrimental as it leads to increased collateral liquidations, which has a negative impact on related assets. However, some lenders have taken a prudent approach to recouping capital. BlockFi confirmed that they accelerated the loan via liquidation and hedging collateral. When it comes to managing assets, carelessness with your own money is one thing, but carelessness with an investor's money is another. 3AC has a responsibility to its stakeholders, or had a responsibility to its stakeholders, and continue to act in a reckless manner. So is 3AC completely done? Well, for the most part, it looks that way. However, there is a small chance they get acquired by another firm. FTX or Binance seem like logical suitors, although the damage already has been done. Also, guys, pay attention to some of these cryptos. This is a list of 3AC's primary holdings. Many unlocks are yet to come on tokens that are still vesting. It's foreseeable that they look to exit many of these positions, so keep your eye on the upcoming locks. And some of these positions, guys, include Avalanche, Bitcoin, Ethereum, Kusuma, Polkadot, Solana, and many others here. I will link this in the description if you guys are maybe invested in some of these cryptocurrencies and want to pay attention to what could be coming next. The DeFi Edge published a fantastic thread which outlines exactly what went down with 3AC, so that is also linked in the description of this thread. Backtracking to May, if it weren't for the collapse of Luna, it's very likely 3AC and Celsius wouldn't have reached this fate. But since Luna and Terra did collapse, we are now where we are. Since major players in the space are inextricably linked, contagion often finds a way to spread. Remember, there's significantly more VCs, capital, and leverage in crypto now than there was in 2017. This means the drawdowns are continuously becoming more extreme. There's a lot of leverage left to be unwinded and big players to be liquidated. Crypto was created as a solution to the pitfall of centralization, avoiding the over-leveraged greed and manipulative figures of Wall Street, and recent events now suggest we still have a ways to go. So what's next for crypto after 3AC's downfall? Well, it would be naive to suggest the contagion has stopped. 3AC and Celsius are two of the first institutions to reach the brink of collapse, but will certainly not be the last. Unfortunately, these events are a bad look for the space and certainly hurt the credibility of crypto. But this great leverage reset is essentially to ensure the long-term sustainability of the crypto market, as painful as it is in the short and medium term, guys. So this is not the end of the crypto market, but this could be the end for a lot of these altcoins that, have been created over time. 19,000 plus altcoins, almost 20,000 coins there. I'm going to be really excited when I start seeing this number start falling and coins getting wiped out left, right, and center. You couple that with what's going on in the US with the lawsuit. Once we get the answer in the Ripple lawsuit too, I think we're going to start to see the utility coins really thrive. The money is going to pour into those coins. That's where we're going to see most of our gains, guys, I think, for XRP. So just to make note of this, I felt like I should do this video today to let you guys know kind of where we're at. Bitcoin did just go under $20,000. So I'm sure a lot of people were wondering, even when it was at 30, is it going to go below 30? And now it's at 20, is it going to go below 20? And here's where we are. Seeing people buying here, Bitcoin, Ethereum, alts, whatever. This is a tweet posted from Rager, by the way. He says, that's fine. We could be in a local bottom, but prices could go down another 20% or so. So be comfortable with that. Don't buy just because others say they are. Analyze the market and make that choice for yourself. And so again, guys, I'm going to let you know when I'm buying. I have not purchased into any position as of yet. So just going to show you guys the Bitcoin chart here. Yet again, we have now hit the former all-time high for Bitcoin. Throwing a Fibonacci on here, you could see we are now at this level here. We are at the one level here, the former all-time high. But, it could be that we reach as far down as this. Now, this would bring Bitcoin down to about $13,200. And the reason I say that, guys, is because just going back, reverting to the, the old metrics where we saw Bitcoin go in the past, right? We've seen 85% drawdowns for Bitcoin. That is no surprise. Well, this would bring Bitcoin down to roughly 80%. So bringing it down to $13,200 again. We just got to keep an eye on the chart because this is ever moving. People are continuing to trade. More news is coming out. So it feels a little chaotic right now. King Dogo XRP here also saying, just like I said, what is happening right now is definitely not following the structures from the two previous cycles. Liquidations, fears, rugs, wrecked stablecoins are all crashing this market without any retracements. They will crash it all before the XRP Phoenix will rise, which just brings me back to this point that the utility coins, guys, these are going to be the ones coming out of this. This is where the market cap will flow into. Think about it, $1 trillion, $2 trillion, $3 trillion moving into utility coins, the 1% of coins that are going to hang around for the next run. That's something I'm looking forward to. And again, looking forward to adding to my positions along the way. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.